welcome to the Stock Market Morning Prep video for Tuesday, June 24th. A little bit of a mixed bag, very quiet though. Summer trading is definitely upon us. Dow Jones was down about 9, NASDAQ up 64 cents, S&P down 26 cents, and the Russell down 348. So really quiet trading. Markets are still holding in at the upper end of the ranges, so there's really not much to talk about when you're talking about the indices. Are we due for a pullback? Absolutely. We've been talking about this for several weeks now, if not months. The markets are extended, but again, the markets can stay extended and overbought for a long period of time. So that's why you really have to be selective in your trading. And I do believe that this is obviously a stock picker's market. But again, you as a trader, as an individual, can only look for so many stocks at any point during the trading day. So sometimes you will miss stocks that are moving. But I just wanted to go through a few things that I'm looking at that are kind of setting up for this week going into next week. Now, this is the last week of trading. You usually get closer to the end of the week mutual fund inflows coming into the end of June, the first day or two going into July. And remember, as the summer months continue, volatility will drop. I can't see how much more can it drop. We really have no volatility out there at all. And this is just so unusual. I've never seen anything like this in 27 years doing this. It's just extremely quiet. And that's what really scares me. Because, again, at any given moment, we can have some sort of shock event. And to be honest, as of late, we have the Ukraine situation ongoing. We have Iraq that's getting worse, and the markets just don't care anymore. And we have crude oil well above 105 and change. Actually, it was at 107, and we still don't care. And it's just pretty amazing stuff, I tell you. Pretty amazing stuff. But let's get into the charts and show you what we're looking at for today's trade. First, I just wanted to go over the VIX. As you can see here, you can't get any more complacent than that, except really the VIX being at 0. So it's just incredible how we're so one-sided and no one is worried. Except I know I'm worried. I'm very worried. And that's why I'm not looking to hold too much, if not just very small size. And that would be my recommendation. Look at the ATR, excuse me, ATR versus the S&P. This is extreme here. So when you get to these extreme readings, you have to be careful. Okay. But a couple things I'm looking at before we go into the indexes. Solars are looking very interesting. Home builders are looking very interesting. So I go into the ITB, and as you know, I like looking at what lumber prices do because they do trail, they do follow home construction pretty much verbatim, as you can see here. And then when you get this little divergence and we start separating as the home construction moving up the ITB ETF, you'll see it eventually does catch up. And sure enough, we had this extreme drop, and then we're kind of holding in there. And you can see here, it does look like a small head and shoulders pattern here with the neckline coming in around 23.75. But with lumber prices starting to pick up here, and we are in the summer strength of lumber prices, I would be suspect of this head and shoulders pattern. I would actually say this would be more of a continuation pattern. So, and I'll tell you why. I'll show you some of the charts that I like in the segment that I think that a Toll Brothers, a Lennar, a DHI, Horton, with the stock symbol DHI, BZH. They look really compelling to me. They look really good to the upside. And they've been basing here, so they're off their highs, and that's what I'm looking for in this crazy market, is stocks that have come well off their highs, whether it be a downgrade or an earnings miss or an earnings guidance. And that's what I'm looking for as far as being selective and still sticking with the trend, with trend being up. We not want to be shorting this market unless we really have a confirmed signal to get short, and we haven't had that at all. Selling relative weakness to what the market's doing, a downgrade or something like that, I would be inclined to do so, but even then, it's a little tougher. So I like to stick with the trend at the moment. As you know, the trend is up. So let's just stick with what we have here. So here, home construction. So I want to show you some of the charts that we're looking at. Now here's gold, but I'll get back to gold. But if you see, let's take a look at Lennar. You can see Lennar has a nice basing pattern here. And even if you want to call this a little cup and handle, you could just, if you draw a line going from here, And this really acts as a bull flag, but you could even say that that would be the handle. But I like to look at flag patterns a little bit better than cup and handles. But you can see a nice flag pattern here going into a moving average. Now, it was up, and you can see the candlestick when the wick is up about 41, 44, and then it just kind of turned down. But if you look at these basing patterns, this is what I like to see. And if you're patient, you can really get some good moves. And you can see they're all like this, well off their highs. We came up and now we came in and we're basing for 4 or 5 days. Now, obviously, easy to manage here because your stop would be below this wick, again, or it would be based on your trading plan. But me, ultimately, I like to give it a little bit of room. So if you are swing trading this thing, it would basically be right around this area here. So I like the way they look. DHI, as you can see, and you can see very similar, same pattern. And then, of course, you have BZH. And then it calls Pulte Homes. Now, BZH is actually really basing, and it really hasn't gone yet. So this would be a little bit of a lagger, but if you're a little patient enough, you can look to get in and then put your stop somewhere in this area here. So not as good as the other ones, but I do like it, like Pulte Homes PHM. You'll see Pulte, again, very similar. Came up, pulled back, and now starting to break out here. So keep an eye on what Pulte, keep an eye on the home builders. Let's go into gold. This is the gold future. As you can see, had an explosive move last week, and now just consolidating. And I like this metal to go higher. In the longer term picture, it's still in a downtrend. But if you see here, it's kind of making a little bit of a pennant. I'd like to see a deeper pullback, maybe to that 8 if we can get there. I don't think it's going to happen. So you have gold rallying, you have healthcare, and you have utilities, right? They're all rallying. Let's just take a look at utilities. Utilities is obviously very odd, and I mentioned this many times. Why would utilities be up making new highs if the markets are so healthy? But they're not. It's just being induced by the Federal Reserve, and market participants are buying based on that, and that's it. We have a fairly valued market, so that's why you have to be a little selective in your stock trading. Okay, but I do like gold here. Gold for a trade, even for a day trade, we can get a little bit of a pullback early on in the session before the open outcry closes. I do like gold here. Okay, now let's go right into the indexes and take a look at the Japanese yen spot. Now we've had a Fibonacci cluster capping this whole move pretty much all of 2014. So we really need to break back above it. But you see it's stubborn. It hasn't sold off here. And we do have some bullish symmetry here in our moving averages here, starting to kind of lift away. So if we can get a breakout, this will affect the movement. Definitely at least cap any type of continued rally in equity. So keep an eye on the spot yen, or if you don't have the spot yen, you can look at the dollar yen, which is correlated with the S&P, meaning that it does move in relation to what the S&P does. Here's bonds, kind of stubborn too, not going anywhere, right? We caught that 1272 extension. We do have that inverted head and shoulders that I showed you several weeks back. As you can see here, this here would be the left shoulder, the head, the right shoulder, and the movement, the pattern measures to the 1272 extension. The 1618 extension of the 140.26. So that's where I think bonds ultimately go. In the longer term picture, I do think bonds will eventually sell back off again. But you have bonds still well bid up. Gold starting to rally, utilities, healthcare, consumer staples up. These are all safe haven sectors that should not be rallying with the markets being up like this. So we do have a sort of a phenomenon here. So we just want to keep that in mind when you're buying stocks. Don't get too crazy getting long, because at any given moment we can really start to sell off. But in the meantime, we definitely want to stick to what the trend is. So let's go right into the indexes. As you can see, we're holding well above the second extension of the 1618. So it's really doing nothing wrong. And you can see we have bullish symmetry on all of our moving averages here, and we're just kind of making higher highs and higher lows. We are setting a stage for another pop higher. But remember, when you're at these extensions and you're overbought, anything can happen. But if let's just say this wasn't here and we were down here, this looks like it wants to move higher yet again, break out higher. I know it sounds crazy, but you can't rule this out. Let's put it to you that way. All right, let's take a look at diamonds. Diamonds again hasn't reached the 1618, but again, doing nothing wrong here to the long side. Now the transports could be at least the canary in a coal mine, if you will. We did make a lower high off this previous high. We are in a channel. And again, I always say, I've mentioned this many times the last several weeks, that this is just unsustainable. Sure enough, we did get that drop in 3 days, wiped out about 10 days worth of gains, and then again rallied back, and now we're just sitting here, a couple of dojis and decision candles, and now sitting on the 8. So I think it could at least pull in and test that this local low here, and then see where we go from there. So if the transports pull back, then indeed we're going to get a pullback. And remember, if you are looking to buy solars or the home builders, remember, if we get a risk-off environment, they will sell off too. So just keep that in mind. I'm talking about for a trade. And again, a trade can continue to work day by day. So if you look into it and you lock in some profits, look for the same trade again. Look for the same setup. IWMs did really, really well the last couple of weeks. As you can see, pretty much all of June exploded higher. And again, now is making higher highs and higher lows. So this downtrend has ended, and now we're looking for at least a challenge of the highs here. Okay, and lastly is the Qs. Qs really doing nothing. Nothing wrong, but just basing here. So it's interesting to see where the semiconductors and big cap tech go in the next coming sessions, because if they start to falter too as well, which they've been a little weak of late, then I think pretty much the market starts to go head lower too. You know, we are in the summer months, so you have to be careful because we have really thin volumes. So if we do get some moves, the moves can be exaggerated. So that's something that I just want you to be aware of as well. So remember, just make sure your stops are in place, and don't get too crazy on the long side, at least not yet. You know, again, I'd like to see a real decent pullback, and I know it's going to happen. It's just a matter of when. We're not looking to wait around doing nothing. So whatever we can do, you know, pick some good quality trades. Hey, look, you know, 3 to 5 trades a week. You do, you bank some profits, and you're making money. So there's no reason to continually be in the market. Just step aside and wait for the setup, because again, it is a stock picker's market at the moment. All right, guys, have a great day. We'll talk to you tomorrow. Take care.